yeah, Bitcoin, huh? Ethereum, huh? Nice move to the upside. You excited? I'm not excited yet because the good old Jerome Powell's going to be talking very shortly, ladies and gentlemen. Welcome to tonight's live, man. I give up. I really do. Like, I can't stand staring at these lights. I've got to wear these stupid shades, and I'm contemplating wearing the dark shades, but I don't want to really look like good old Men in Black, look like a right fool. But anyway, let's park that to the side, guys. What's going to happen? We don't know, all right? Powell's going to be speaking in the next hour. In the next 30 minutes, we're going to have the release of the federal funds rate and then the actual statement. The statement's going to give us insight into what Powell could be talking about in the press conference. You see, with the actual statement itself, it's regimented, which means that we're going to see some bout of volatility very, very shortly. So the first move that's going to happen could be a sweep to the upside, all right? Now, I'm just going to say this. Please, don't play with fire. If you're going to take trades, keep your exposure to a minimum. Don't give Mr. Market Maker a discount. What we're going to do right now, going into the FOMC federal funds rate and the statement, we're going to talk about that nice little play on Ethereum. But I hope you understood it, man. Straight after the live, I pressed the button and then everything went up in our favor. Remember, I've got market maker friends. They give me some devices. I press these buttons, and when I get off the live, you notice Bitcoin and Ethereum didn't do nothing until we finish. I'm joking. No, I'm actually not really. Or am I joking? Is there a conspiracy going off that I'm actually a market maker? Do I know market makers? Am I friends with one? Well, Steve. You know Steve. Anyways, let's get with the flavor, man. Enough BS. Let's get with the program. Welcome to tonight's live, guys. It's FOMC. Let's see if Bitcoin will come through, okay? Hold on to your horses, man. Hold on to your horses. What a guy. Anyways, what is good? Good evening. Good afternoon. Thank you very much, Marcus. Tino, you look beautiful. Marcus, cool. Thank you so much, my friend. Demo trade the... Yeah, you can demo trade this bad boy, you know? If you can demo trade this, but actually, nah, you'd forget that anyways. But it's a good experience. But then I wouldn't encourage you to demo trade this sort of scenario. I would say use real money during FOMC just so you know what it's like to be stung by Mr. Market Maker. Because demo, you just look at it and laugh if it goes against you, and then you're done, okay? Anyways. Nice drip, thank you. Drop the link. Well, look, man, you can see that the shirt itself is a little bit bizarre. You know, there's some elements of green on it, which is why it's effectively see-through. It's the EXO shirt. Come on, man. Look, Call of Duty and what have you. Got the skulls. You know what it is. But let's get with the charts, ladies and gentlemen. In all seriousness right now, there is one zone in particular on Bitcoin that we really need to be paying attention to. In the next 25 minutes, Bitcoin is going to prove to us as to whether or not the close of this monthly candle is going to sustain a good close to the upside and fill as much of this candle wick as possible, okay? Most people would look at this as a rejection and say, yeah, there's resistance up here and, you know, there's supply, stop talking breeze, okay? Naturally, when we look at these charts, there's like this self-fulfilling prophecy that when we talk in hindsight, we're talking about, oh, that area is an area of resistance, okay? But you only have to go into today's live stream to understand that what we do on this channel is done in real time. I give you a play. I break it down to help you to understand how this business works. And then, of course, it works. Happy days. If it didn't, then that's the name of the game, ladies and gentlemen. If it works in our favor, we profit from it. We get, you know, we're excited about the idea that our analysis has come through. Awesome. It shows that we're understanding something, right? If it doesn't disprove our analysis. It just means that the move is not ready, okay? So if we just go back into that logic itself, we can then say to ourselves, okay, then what is it that we understood about Ethereum from that point in time, okay? Going into Ethereum right here, where is it? Here we go. Look at that. Happy days. It was a beautiful play, but you guys understood the logic behind it. You could make weight to it. And if you remember on Ethereum, do you remember that little liquidity down there? Do you remember? In the live stream, we spoke about that little pool of liquidity down below. We were like, got to be careful with that bad boy. They came and wicked that little area and then shifted back out. All right? And that is what we realistically should have anticipated. But it was the vector candle recovery to the downside, shifting out to the upside. They achieved the daily open. Happy days. Please, if you are new to this channel, please go and watch the stream I did this morning, as you'll understand the logic of this move up. And I'll go into quite a bit of detail about it, but it's going to serve you because you're going to really understand the difference between why, when you look at these candlesticks, you can say, oh, wow, yeah, price is going up, bullish engulfing. What you really need to be saying to yourself is there has been an aggressive amount of offers being taken. So they lifted the asking price. And that is what resulted in a move to the upside. At the same time, the liquidations of the retail traders who went short in this area fueled the move to the upside. Okay? So it's really important that we get that. Please go and watch that live stream, man, and you'll learn a thing or two about the offers and the bids. Now, the fate of Bitcoin, the fate of Ethereum. We can see Bitcoin is looking like it wants to try and roll over right now. If we just get rid of this stuff here, move this down, happy days. Okay, now what's the range going to be like today? Well, look, if we're going to see fast price action, we really need to see Bitcoin clearing this red vector candle region, okay? Now, look, this area here is so important because it's a huge imbalance, and we are on the assumption that there's going to be an influx of offers coming in as FOMC plays out. Now, a lot of people are thinking Bitcoin's going to drop, okay? But it's not going to drop before it moves up first. It has to go up first, all right? Because if we go to the actual order book itself and pull up Bitcoin, we're going to understand what's happened since we last done the live. So what do we see? Okay, now we're getting commitment. Who's down here? Look, where are the bids? Where are they? The bids will only really come into play if price starts to work itself out and move lower. But the actual dominating side right now is the sell side. That means price in principle should be moving up. Okay? What's this? Can you talk of USD JPY? Also was wondering whatever happened to your Call of Duty streams pre-face reveal. Been watching you forever. What's going on? London's falling. Listen, the reason why I don't really do Call of Duty anymore, well, it's not no reason why per se, but it's just the concept of time. My life is very fast. I could be sat at my desk in one instance, and before you know it, I'm halfway down the road. And I'm like, well, what happened there? How did I end up here? That's my life. But I'm going to try and do these live streams, man, these Call of Duty, because I do lose my nerve, and I do get a bit frustrated, and I do spill out profanities. So if you really dig that kind of anyways. So back to this story. The offers seem to be coming into play. Now, we've just said that Bitcoin's going up. Okay, that's what my logic is, that we're going to anticipate a move to the upside. All right, I'll look at USD JPY in a second, bro. This, to me, is going to be a trap. People will see Bitcoin move up, right? And they'll be so excited that Bitcoin's moving, Bitcoin's breaking out, buy, 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 buy. You are fueling this offering that's happening right now in the charts. Stick with me on this one. Behind that offer is this vector candle zone. We know market maker has transacted already on this range. That means he's been going long on the move to the downside. So it's very important that we understand that. So what's going to happen as price moves up? Well, liquidations are going to get triggered. We go into the coin angle, we can see that there is not so much, but there is a relative amount of Bitcoin shorts right now, and it's at minus 4.69%, and it has increased ever so slightly, all right? And we can see volume is down on the CME futures, it's down on Binance, So one would be in the understanding that trade has actually slowed down. If you go over to here, you can see on the futures markets in terms of unusual volume, look, man, double digits. I'm not seeing the 300s, the 400s, the 500s. It's just double digits. That means this move to the upside could be on light volume. Again, once the news comes out, once the news comes out, logic says that these offers right here will be swept. That would be the advert. That would be the reason why everyone's going to be like, go long on Bitcoin. All right? And that's what we've got to be careful of. The first move is always the false move. And we've seen it before. If you go back in the charts on Bitcoin, on Fomc, Bitcoin makes a nice move up and then just comes straight back down. If the ETF can't make Bitcoin shoot up, I mean, this is all ETF. This is all ETF right here, in my opinion, right? The day the ETF gets announced, it's a sell the news event and it just slumps. All right, bro. Cool. Thanks for that, bro. RTB, stop it, man. But thank you very much, my friend. Thank you so much. So are we all on the same page right now? Okay. We know that there's offers that are coming into the chart. And we go over to the book map itself. Where are we? Where are we at? Here we go. Happy days. We can see... What's going on here? Oh my days, I nearly pulled out my microphone. We can see that we can back those offers up, right? And we can see them all up here. But what you got to be mindful of is these offers are only valid until they are hit, right? We make the assumption that we're going to see liquidity get swept to the upside. And down here, we're not really seeing any bids, okay? So we've really got to say to ourselves, are we going to trade the idea of price moving up? And listen, if you're going to open positions right now, just be careful, okay? Be careful because it can happen very fast. And you know what these exchanges are like. There might be slippage. Slippage is when you say to yourself, I'm going to take an order at this point right here. So here's an example for those of you that don't know. And slippage is huge in Forex sometimes. Here is the price point that you decided to enter, right? But then all of a sudden, because of how fast price was moving, you assumed you were getting in at 38,191. It actually fills you at 40,893. I've seen wild spreads on slippage before, okay? And you've got to be very careful. Slippage also means that if you've got a stop loss at 38,191, price can break all the way down. Your stop loss is still there, but price is all the way down here. And then when the market stabilizes, then it gets triggered. But it gets triggered down here. So you lose more than what you bargained for. Hold on, what the hell's the point in the stop loss? Exactly. Don't have a liquidation. Have a stop loss. And the only reason you'll experience this sort of thing is if you trade now. If you trade these sort of plays. Okay? If you don't have a stop loss and you, of course, you have a liquidation, well, you're going to have to get ready to sell your nans long because there's a good chance you'll get liquidated if you're on the wrong side of the move. Granted, if it works in your favor, you can now buy your nan a new long from the first one that you got from her in the first place. So you'll be all happy days. So that's really what you need to be mindful of, okay? Now, back into the story of, let's have a look at bit of Forex right now because their news is going to come out very shortly. So, Euro, treachery. Nice flavoursome move to the upside to only bring that bad boy all the way down again. Euro's doing the level 2 cyclical sweeps. Remember that. Platinum members, look what's going on with Euro, okay? They could be leaving clues behind. They're like one's up here and one here. This is a level 2 zone. So we're going to be very mindful on what Euro's going to do next. To understand what Euro's likely to do next, you got dollar yen. Has dollar been set up to effectively move up? Well, remember what we said earlier on. Traders are betting that the Fed's going to hold its stance on the interest rates and maybe not decrease them anytime soon. So the idea of a Fed pivot is out the window, but more importantly, the value of the dollar could appreciate, which is going to encourage foreign investors to come in and take advantage of the yields that are rising on the back of the Fed, keeping interest rates still high with no prospect of cutting them anytime soon. Remember, like I said before, the Eurozone struggling right now on what to work out, whether they're going to increase the interest rates or decrease. The UK experiences a surprise reading on inflation, giving them the bit of the wobble, thinking, you know what, should we actually cut our interest rates? But like I said, the UK is dead, all right? I'm not even going to go into that story. One guy said there's bike lanes everywhere, and this is true. There are so many bike lanes in the UK, it's actually infuriating. No. Just don't be around me if you're a cyclist in the UK. I have zero patience for them. Zero. I ain't slowing down for you, bro. You're taking up the space. I have priority. Don't give me no bike lane. No offense to anyone that rides bikes. I'm just saying, like, from my perspective, when I'm trying to go somewhere and I've got this dude riding his bike, blocking me from actually maintaining the speed limit. Oh, God. Anyway, so that's where we are, all right? And this move to the downside on the dollar pairs across the board, it's kind of giving me a little bit of a heads up that maybe dollar strength could be coming in very shortly, but it will happen after they've released the news. That means everything will shoot up to only come back down again. And we're looking to see if that's going to be the case. What I've advised everyone and the members of the channel on the website is to wait for the vectors to appear. Earlier on Ethereum, we gave you a story about how they kept price. Even Bitcoin did the same thing, all right? They managed to give us the clue what they were planning on doing. These vectors right here, you waited, it delivered, okay? We're now waiting for the same story right here with Bitcoin. If they do decide to roll out price to the downside on the statement, then FOMC press conference could surprise everyone else and Bitcoin shoots up a bit more. Again, look at what's going on. I'm not seeing the bids coming in at all. Let me just pull this up for you. What time are we on? Set 10 minutes yet. So an hour ago, we had an order, 52 Bitcoin, 2.28 million. Not really enough to say, oh my God, tell your nan, all right? Keep going up here. We got offers at 5 million, which sits at 43,890. 10 million, that sits at 43,930. 44,000, 8.7 million. And 11 million, we got 44,150. So we got 268 Bitcoin at 11, at 44,150. So 11 million seems to be the largest order amount that I can see in the visible range. Oh, wow. 44,500. We've got 31,703 Bitcoin orders. Let's just back that up a second on the book map. There it is, right there, okay? So it's going to be the same because it's Binance API and what have you, okay? Now, we can see here on the book map if this player has been committed or not. And you can see that there's a gap right here. That gap means they effectively pulled the order, okay? So even though there is a good 700 Bitcoin up there, we're going to wait and see if they can actually get filled. But the narrative is price is going up. And I'm just warning you all that if the news comes out that we're looking at this thinking it's going to shoot up, just don't be on the other side of it because it could tank first, then hit the offers. Just be careful. These offers are here for a reason, all right? Where are my bids? Where are they? Because there's not really any bids coming into play. I've seen more on the offer and the bid on non-farm payrolls than I have on FOMC because there could be the possibility that people are not actually in positions or not as many people are in positions. So that's something that we've got to really take into consideration, ladies and gentlemen, okay? What we got here? Tell us, what's this? Bid should be already good to go. Time to check synthetic. I'll check the altcoins very, very shortly. Okay. Anyways, what a sad guy. Curious. Bitcoin will move with FOMC. Now it's Wall Street. In the past, it really didn't. Yeah, this is what you've got to take into consideration, right? FOMC, Bitcoin before, didn't really do much. It did it afterwards, all right? More importantly, the actual ETF itself, they filled that gap, all right? It gapped down. They filled the gap. We assume that they're accumulating the ETF. This is on the 5-minute time frame of the Bitcoin ETF. And we've got vectors all the way down here, man. And we've got a gap down there. So there could be profit taking. Ah, man, you know, it's one of those ones. The ETF is still in its prime. We've got a couple of more gaps up here that we need to take into consideration. Where we at? 7 minutes left. Okay? So just be very mindful with that bad boy. Cycles are the holy in Netherlands. Trust me, there is no... Okay, more... Okay, fair enough. Hey, Tino, is the level 2 consolidation on the 1 hour time frame invalidated? Level 2 on what? Bitcoin. Level 2 consolidation. All right. What have we got? Level 2 consolidation. All right. Okay, then. So the idea is that this is level 1 on the 1 hour time frame. Okay. Principally, this is level 2. All right. Now, they've marked down and validated level 1. This retrace back up has gone back into level 1, okay? Now, when you look at it from this perspective, the levels here are they've effectively reset. Why? On the 1 hour time frame. They've reset because they've managed to get back up above the previous level 1 zone, okay? But let's just give it a little bit of room. Hypothetically, let's assume that price comes all the way back down again, okay? It would have to end up in this area here for us to assume that the level 2 is still valid. Why? Because we can then say that this was a stop run, okay? If you go into the even higher time frames, it's a little bit more clearer. Look, there's the level 1. There's an imbalance. They've tapped into this imbalance, come away from it to reverse back into it, okay? The only way that this cyclical pattern is invalidated from the peak, okay, right here, the only way it's invalidated is if price surpasses this point, okay? If it gets above that point, then it's a reset on the cycle, okay? Okay, T-Rex, what's good? So in crypto, offers are making the markets rise and bids are making the markets fall. Isn't that contrary to normal bid order flow? I mean, not every trade is leverage and has a predefined liquidation trade. Yes, this is true. So when the bids and the asks come in, I haven't even got it. So when you're trading the bid and the ask, all right? So look, this order here is 43 million. That's 429 Bitcoin, all right? At 44,000. We can't assume that's a liquidation point. We can't, because someone's placed that order, all right? And they can also remove it. And then they can also put it back in again, okay? Now, it'll be a little bit bizarre if someone is opening a short and the liquidation point is exactly the same for such a large amount, hypothetically, okay? Remember, liquidation points or margins that are used on leverage, okay? When retail traders use leverage, market maker is supplying that liquidity, okay? Now, these are all big. This is, I believe, if I'm correct, the contracts themselves, all right? When we look at, where is it, EXO charts, all right? These are contracts of Bitcoin, okay? But these are all resting orders. All of these here are transacted orders, so orders that have hit the market. These haven't hit the market yet, so these can come and go as they please. Now, in reference to your question, okay, I won't say it's a question. Isn't that contrary to normal bid offer flow? Yes, it is, but I'm trying to get so you can understand it, all right? There are different sequences when we do bid and offers, all right? So there's two terms. They hit the bids, price goes down. They lift the offers, price goes up. But the only way that the offers can be lifted is if you've got a commitment of people buying. That means aggressive buyers come in, they're lifting up price because they want the supply. And the only way they can get the supply is if someone is selling. So all the way up here, you've got 147 Bitcoin in the book, okay, at 43,793. The idea is that if price continues towards that zone, someone's going to sell 147 Bitcoin on the back of someone buying it, okay? So someone's going to come up with the capital and sweep that up, okay? When it comes to liquidations, naturally, we're going to assume that there is going to be liquidation points in all areas of cryptocurrency. But the bid and the offer, it's not reliant on the margins of leveraged traders, okay? It's one of those catch-22 scenarios, if you know what I'm saying. I hope that answers your question. Okay, then. What else we got here? We've got 2 minutes, ladies and gentlemen. Bro, all altcoins are not right now. Do you know what time it is? Oh, I'm maybe talking to someone else on that bad boy. Okay, then. Here we go. Tina, I have an important question. Please, could you take a moment to answer with the logic of when price is going down, market maker is buying, going long, as you can't sell if nobody buys. What happens? Hold on a second. So with the logic of when price is going down, market maker is buying, he's going long, as you can't sell if nobody buys. All right, then this is how it works, okay? As a market maker, you've got orders here. I'm Mr. Market Maker, and price is all the way up here, all right? This is where we are, okay? We're going to see some volatility in a second, guys. Wait there. I'll explain this in a second. Let's just get Bitcoin up for a split second. Hold on. We're going to see the movement. Here we go. Let's get Bookmap. Let's have a look at that bad boy. Let's see what happens. Will those offers get taken? Now let's get XO charts. All right, then. Here we go. So Bitcoin in the middle. And then we have got XO charts. It's currently at the point of control. They've already swept this area up here. Got offers coming in. 168 at 43,793. 43,847, 128. And then 82 at 43,739. We want that vector candle recovery to the top side. That will be the ideal story. The offers are right there. So we're going to wait and see if they are actually going to gun for it. Bitcoin has frozen. It hasn't done anything. NASDAQ in the corner right there. Where are you? She's about to do some flavor. Just keep an eye on NASDAQ on the right there, ladies and gentlemen. NASDAQ's been an interesting one today. Collapsed price straight after the New York Live. Here we go. You'll see NASDAQ move first. If it's good news, NASDAQ realistically should be dumping to reverse back up. Here we go. This is the actual federal funds rate. Probably kept it at 5.5. And then the statement. Here we go. Offers are still being placed. 737 Bitcoin at 44,500. Here we go. Get ready, ladies and gentlemen. Here we go. Oh, my days. They move down. Come on, NASDAQ. What are you doing to move back up? Come on. Is it good news? I don't know what the news is. This is the ticker for Bitcoin. It's still holding. Pay attention to these offers over here. 743 Bitcoin at 44.5. Bitcoin hasn't moved. If we don't really get much movement, then we're waiting for the press conference. NASDAQ's still not doing too bad. Look at that. Nothing. Nothing at all. Has it come out yet? Now it's out. Okay, then. Nothing. Boring. Bitcoin not doing anything. Coming away from its point of control. Now they're going to start transacting. Here we go. Seeing these passes. So I'm going to be explaining very shortly what I mean about the bids and the offers and how the market maker effectively gets orders filled. NASDAQ slowly going down, but not really going down. So that's consistent with them getting ready to load up for a move up again. There's the imbalances there on NASDAQ. Bitcoin's delayed in its response. All right, then. So it's come out. Nothing favorable, really. I'm not really seeing anything. Has anyone got anything? USD's gone up. Okay, then. Nothing interesting happening. Federal Reserve leaves the interest rates unchanged, remains. Yeah, okay. Five. It's the same. All right. So it's nothing that we don't already know. Okay. So it's the press conference that we're looking for. Those offers haven't really done anything. They're not really taking anything off the table. Bitcoin has not moved at all. S&P's taking a stab to the NASDAQ, and S&P are just slowly dropping down. They're only giving back what they just recently took back in the charts. And Bitcoin's holding out at the point of control. We could see a little bit of a reaction, but Bitcoin is doing very well at this point. Let's just have a look at Ethereum. Is she doing anything? Ethereum's not really doing much either. So look at that. So I guess Wall Street really isn't down with the crypto. In other words, they're not really letting it drop or go up. So that's a bit of a problem for me. Let's go to the 5-minute time frame. Yeah, nothing's really happening here. They just marked it back up again. So they're waiting for the press conference, ladies and gentlemen. That's what we're waiting for, okay? And people are looking at this thinking, oh, wow, Bitcoin and what have you. So that only means, I mean, we've got this vector candle zone. Okay, so the volatility is coming very shortly, guys. There's no two ways about it, all right? This is a very delayed response by Bitcoin. Looking at that, it's not getting anything. Okay, so Bitcoin won't really do anything. Okay, go to the dollar, Tino. Let's have a look at dollar for a second. Yeah, let's do that for a second. Oh, shoot. Support zone has come into play. They marked dollar down to only bring it back up again. Damn. USD JPY. Standard. Do it every single bloody time. But that's right now. Look at gold. Investors were selling. Hedge fund managers were selling gold. All right. Retail was buying. Now look what's happened to them. They got slapped. Damn. Yen. Oh, yeah. Yen can't afford to be so expensive. Yeah. Yen's coming down. Dollar's shooting up. Oil getting ready. Back into that peak breach. Okay. So just be careful with this zone with oil. NASDAQ. Not really doing much. For the day, it's gone up to only come back down. Okay, so fine. Press conference is going to do it. Tesla. Gap play right there that needs to be filled. Okay, then. All right, let's go back into Bitcoin. Not doing anything, guys. All right, then. Questions. Here we go. All right, then. I love the Viking. Okay, then. Look, when I say they, as a figure of speech, we're talking about market makers, the algorithms, the guys that move the markets in principle, or should I say that allow the markets to move. So let's go back to that gentleman's question, all right, where he's talking about how does the market maker place his orders and longs to the downside and what have you. Inside of the book, okay, let me bring it up for you. Let's do it like this. Inside of the book, there are four types of players in the book, okay? You got aggressive sellers, aggressive buyers, passive sellers, okay? Passive sellers sit on the left side of the book, okay? And they're the ones that are going to be selling as price slowly marks up, okay? Now, the only way that those passive sellers can really sell is if aggressive buyers come in and take those orders, okay? Now, depending on the market maker and as he is providing the liquidity, he's going to have orders all over the place, all right? And remember, they're only seeking small movements, okay? They're not swing traders. Well, principally, they could be, depending on the positions they're playing, right? If they're trading quarters, okay? But the market maker, in principle, has got the algorithm where it's programmed to take liquidity, replace it, match it, profit from the spread. And the market maker makes his money off the bid and the ask, right? He profits from that move. And he's doing it thousands of times per second. Fast. When price starts to mark up, That's because market maker has a pool of liquidity up here that's got, for example, say hypothetically, he's got $100 million worth of offers up here. Okay. If he's done his business in this area, he's going to look to start marking price higher. Now, in order for him to mark prices higher, what has to happen? Well, before it can go back up, market maker would in principle be setting up his orders inside of this range. That means he'll be a passive buyer. So he's going to have buys or limit buys as price is going down. Okay. The only way price can get to those areas if the market maker can sense that he's got an interest to send price lower because everyone wants to sell, or he gives the market a reason to do that. Aggressive sellers come in and offload, and they can only offload if there is a passive buyer behind the scenes. Okay? So you've got this battle between the passive buyer and the passive seller that is being fueled by the hesitation and the greed from the aggressive seller, hesitant, aggressive buyer, greed. Okay? I want to get Bitcoin. I want to get Bitcoin. He's going in. He's going in. He's buying it. He's buying it. He's buying it. And you've got this dude sat here allowing each of those orders to be filled. Okay? Now, when the market actually decides to reverse, that's when market maker effectively changes the program because he's the one that prevents price from going further. Why? And the only reason he does it and why he does it is because his objective at building longs on the move to the downside is achieved once price comes back up and recovers the whole thing. Remember, he's getting orders filled. And what we don't know, okay, is the concentration of orders. That means he might have 10 contracts here, okay, 10 here, 15 here, and then he might actually have 200 down here. Because then you'll say, but hold on, Tino, why is it price makes a move up and then at this same point, it moves back down again? Well, he would have made his money on the drop. And that's where you see the biggest reversals. That's where you see the V-shaped play. That's why these points in the chart are the most aggressive points. And that's why they happen so fast. Okay? That's why how you can capitalize on these plays. The play earlier on Ethereum took a little while. But they manipulated the range by marking it lower to reverse it back up. And then the green vectors gave us the clue that they were getting ready to start marking price. Go watch that live stream. It will make sense to you from there. Okay? All right then. Cool. What else have we got? Tino, so yeah, okay, so that's been done. Okay. Any other questions right there? Tino, change to the 1 minute candles. What do you need to see on the 1 minute candles? All right, then. Look, nothing's happening. It's all a press conference. Does the OTC trading affect the market at all? Of course it does. Over-the-counter trading. Over-the-counter trading is we don't know who's trading. So over-the-counter, it's like, yo, I'll take that. I'll take that Bitcoin. Someone goes in and says, all right, I can see there's 400 Bitcoin over there. OTC, happy days. I'll take that bad boy. Shh, don't say anything. That's what the Forex market is. We have futures data for Forex, like the Euro futures, pound, yen futures, but we do not have foreign exchange, the spread, okay? Contracts for difference. We don't have that data. Why? Because Forex is spot. You're trading spot on MT4 platforms. We'll never know who's buying and selling. We can only assume patterns, Wyckoffs, Elliots, and all of that gang, okay? So, we've got a CME gap at 20,000, 21,000 on Bitcoin. And as per looking at the data from the previous years, Bitcoin before halving shakes down the weak hands before going in a bull run. How do I say about it? Okay, then. So the gap the gentleman's talking about, CME, hold on. We've got some move. Oh, it's a 1 minute time frame. Not really bothered about that. So the CME on Bitcoin, where is my Bitcoin CME? Here we go. 21,000. Is that correct? Okay. Did you say 21? 21,000. Oh, that's, yeah, okay. Is that 35? Yeah. All right, then where's this gap you're talking about? 21K. Okay, that's the gap we're talking about. Smack there, smack this right there. Okay then, cool. Now let's reset the chart and go into the higher time frames to put things into perspective. There's our CME gap, ladies and gentlemen. Okay. How many of you actually think that the halving of Bitcoin's price needs to be higher? All right. Or does it need to be lower? Type 1 if you think, well, you would like it to be higher. What we like is irrelevant. But I just want to know where your heads are at. Type 1 if you want the halving or Bitcoin's price to be higher going into the halving, or you want it to be lower going into the halving. All right. Most of you will probably, I want to see what you guys are saying. Okay. Target for today's level 1998, almost there, pending. Okay. So I've answered pretty much, let me see what you guys are saying. How long we got right now? Okay, so 15 minutes. All right, so most of you are saying 2. You want it to be cheaper. That's ideally what we want, okay? We do want it cheaper. In my head, I don't see any event from now up until the halving that could actually trigger a wild sell-off in Bitcoin. Unless it's just going to be something that, I don't know, the miners decide to start offloading their Bitcoin, okay? But there's nothing really happening to suggest that. I mean, we go into like crypto quant, okay? And we have a look at the statistics that are happening over there. So exchange net flow, net deposits on exchanges are high compared to the 7-day average, okay? So higher selling pressure, the net flows are going up. Miners selling, the miners are selling more holdings compared to its 1-year average. Let's just go and have a look at where people's heads are at in terms of the glass node. On net unrealized P and L on that bad boy, where we at? All right, and so most people are feeling anxious right now about Bitcoin's price action. But then again, this hasn't been updated, and we are going into the end of the monthly candle. I mean, look, the idea is that this gap will get realized when it needs to get realized, all right? They clear all gaps, all right? Bitcoin can do the halving, go and hit the 100K high, whatever, and then come all the way back down again. Just because Bitcoin can move up and continue doesn't mean that it can never come back down. You've got to really accept that, all right? The stock market can move aggressively up and aggressively down, but it's been progressively moving up. All right, because that's just the way the business operates, okay? Bad boy's breaking nicely. Look, the NASDAQ, go look at its behavior over a month-on-month basis. They move it up, they come down. They move it up, they come down. These are all resets in the market, but it's been progressively moving up. We've not had a sharp correction back to these levels right here because stocks are a little bit different, okay? They say there's too much at stake. It's too big to fail kind of thing. Well, I don't think they would ever allow the stock market to drop all the way down to 5K. It will be something that progressively happens over a long period of time. It wouldn't happen in one day. If the market drops 7%, if the Dow drops 7%, all trading is stopped. They prevent anyone from trading. So that's it. They won't allow anyone to trade if the market were to drop so aggressively like that, okay? So back to the idea of this gap and the halving. You want really Bitcoin to come down, and then the halving comes in, it becomes cheaper, and then that just brings in more liquidity. But again, are they going to mark it up all the way to the top side? And imagine if Bitcoin goes into play, goes to 62,000 before the halving. Could you imagine that? And then it comes all the way back down to 30. It's like we haven't even left that zone. Oh, what a BS story. Anyways, Bitcoin moving down. I wouldn't say it's moving down, ladies and gentlemen. We've got 4 more minutes until, well, 15 more minutes or so until Powell has the conversation. We don't really have anything happening just now, guys, so I'm not really concerned. If Bitcoin starts to roll over and recover these vectors, it's still a good thing, okay? Tina, I'm stuck in a short with a liquidation price of 44,500. Do you think it can quickly go there to come back down? All right, so what was your entry? When was your entry? That's the thing. You know, so stuck in a short, sorry, price on 44,500. Sorry, I didn't read that correctly. So stuck in a short, oh, sorry, with a liquidation price of 44,500. All right, so let's just go back to Bitcoin for a second. 44,500, that is pretty close, bro. That is very, very close. We know what's happening with 44,500, all right? We know at the top side of 44,500, we have got, where is it? 11 million? No, 30 million. No, what was it? $43 million worth of offers, okay? And sorry, initial amount, 43 million at 44K. It's a valid point that they could sweep, all right? They might not even do it in the FOMC. But if you're given a chance and Bitcoin actually does drop back down and it drops down aggressively, make sure you're taking some money off the table, man. Take something off the table. Because if you get away with it, because you're holding a trade into the news, and if you get away with it and you don't take money off the table, the old saying is you deserve it. Because if you're given an opportunity to take profit and you don't take it and it goes all the way back up, you're back to square one with what you were waiting for to happen, and then it doesn't because it continues back up, because you've got to think about it. Guys right here are trying to run longs. Guys right here are trying to run shorts. Well, who's going to win? Well, we don't know until price decides to roll over. If it works in the favor of the short sellers, they're going for the liquidation points for the guys who've been running longs, okay? Happy days. Now, if it keeps on going down, take some money off the table before the volatility comes in, because it can just shoot back up again. All right, so just be mindful. Here we go, back into the vector candle recovery. Yeah, your liquidation point is pretty close, bro, so just be very, very careful of that. People that want 21,000, 22,000, 12K Bitcoin didn't buy at 15. Let's be honest. If Bitcoin goes to 22K, you people won't buy. Stop it. I bought everything I could below 20K. You're all hoping for lower because you sat out. Yeah, I mean, this is one of those ha, you didn't buy it kind of thing, all right? You got to remember, you can never say never in the marketplace, all right? Now, don't be so obscured with your price projection and be like, there is never a chance. I mean, for Bitcoin to go to zero, you know, we're hearing this thing, Bitcoin going to zero. That's a big thing if it does go to zero. But it'll be back to the altcoin game. Literally categorized as an altcoin. I mean, if Bitcoin goes to zero, then boy, then we've got bigger problems than worrying about whether you bought it or not at that point. Do you see 50K CME gap happening, or are just fake pumping for now? Look, we won't, like I said, when we're looking at these prices, do you understand what has to happen before it gets there? There are so many things that need to occur before price can get to 50K. Again, let's go back to this story with Ethereum. Might be bored shitless with it, but the whole point is the thought process. This is what we had at that point in time. We had a logic, we applied it, and then we waited to see what would happen. It worked in our favor. So when we get to or close towards the gap, then we'll start paying attention. Why? Because then when you see this sort of setup close towards Bitcoin's 50K gap, all right, we're looking at 50K right now because we're only 7K away from it. Not bad, all right? It's not that much, it's not that far away. But with the behavior of Bitcoin going up and down, we go up to 40K. Look, we were at 49 not so long ago. Now we're all the way back to 43. How many times do we go somewhere and come back into it? Like I said, this is a liquidity game. There's no interest, in my opinion, in value. They don't care about value. They really don't. If they cared about value, then why on earth did Grayscale sell their Bitcoin just to go and put it back into the ETF? They just don't care. They just want to move it, exchange it from one price point to the next. There's no value in it. It's all accumulation for those guys, okay? Because they generate an income off the transactions, all right? And that's how it works. I don't believe Wall Street cares about price. What it does care about is how much commitment it has at specific price points, all right? They have no idea. I don't think they care about value per se, unless they are value-based investors. But hedge fund managers, traders in Wall Street, they're only interested in ripping you apart with the spread and getting filled and not being left with a bag that they can't offload for a client, you know? For Bitcoin to go to zero, all the rest of the blockchains and coins would have to collapse. Not happening. and only comes from people that missed the boat. It's called FUD. Bunch of fudsters. Okay, then. You can never say never, but I agree with you. Like, it would be a catastrophic event. There wouldn't be any crypto if Bitcoin went to zero. But it was being transacted at zero. You're saying it could never go to zero because no one transacts at zero, but you could buy Bitcoin at zero. See how, why someone would say to zero. I mean, I'm not actually, other than Dan Pena, he's the only guy that's said Bitcoin to zero, but he's only said it on the idea of who created Bitcoin. If you knew about it, you would run a mile. That's the logic he goes off. But if they bought Bitcoin at 0.01 or 10 cents, there'll be a market for it if it were to go there. I mean, come on. Yeah, I hear that. Okay, right, guys, we have got 7 more minutes. Any more questions? The news is a smokescreen. The price action history does show a correction before a block reward adjustment. There we go. Happy days, which is true. Buy long until proven wrong. This dumb idea that needs to go to 11K to get in. How many, but the last dump, seriously, how many of you bought? I did, and I took profit. Okay, well done. Bitcoin is crashing. Please, bro, where is Bitcoin crashing? It hasn't even moved. Pay attention to this stuff right here, all right? This one right here is Bitcoin's order flow pressure. If it's going green, Bitcoin's going up. If it's going down red and it starts hitting this little line right here, it's going down. If it's stuck in the middle, ain't going nowhere. Let's pull this up here. Let's have a look. All right, in offers. They pulled 200 offers at the 44,500. Sorry, no. Yes, they have. It was 743. Now it's 700. 593 has been placed. Okay. All right. Remember when they said oil couldn't go to zero, went there and passed it to minus 37. You see, that's a point, you know. That is a point. Look. Does anyone remember that story? I do. I remember it very well. Is that even a red vector candle recovery? Look at that. That's what can happen. Okay? That is what can happen. Now, if you just go to here, if logic serves me correctly, where did I see it? Where did I see it? I swear I saw a 56K wick. Does anyone see that? I saw a 56K wick on one platform. Okay? But yeah, that's an example of oil. So you got to be careful right there. Here we go. 4 minutes, ladies and gentlemen. We're going to get into the actual FOMC, guys. We're going to get ourselves prepared for it. I've got it here waiting. I'm waiting to see if they're actually going to do the flavor. Nothing's coming in just yet. All right. So we're going to wait for that bad boy. Okay, then. What else? I'm just saying people have been waiting for price to go down to 11K. Okay, the whole time I made money, they sat on their cash and made zero. Look, man, it's not about whether you made it or not. Okay, if you've made money on Bitcoin, congratulations. Okay, if you haven't made money on Bitcoin, no worries. Because there's no guarantee that you would, okay? Those who got in at the price point of 16, they got the bullet and just took advantage of it. Cool, all right? You can give shit to someone that didn't buy it, okay? But you don't really want that negative, that evil eye, man. It's a thing, you know? In Greek, they call it gadafai, man. That's a scary thing, man. You made your money, shut the fuck up. That's the rule. Keep your mouth stum. You don't want to, anyway. Buy high and higher, sell low, sell lower. This is the retail trading mentality by Whisperer. Thank you. Tino, can you explain? Right, we're going to be getting the party started very shortly, ladies and gentlemen. All right, then. We're going to get our charts set up. No, not these. I'm pulling out DJT. You know, back in the day, I used to do DJing in Cyprus. I used to go to Napa, Napa, and I would DJ out there, all right? And it was good fun. It was good fun. I need to tell you about the champagne story. That was disgusting. It wasn't me. I was standing DJing at the time. What I witnessed was rough. But we'll talk about that another time. Okay, then. All right, we're getting close to the FOMC, ladies and gentlemen, okay? I'm going to just remove this for a second. I know it's on YouTube, but I'm not really seeing it being streamed just yet. We're going to get the party started. Here we go. All right, then. So we've got it right here, guys. Cool. Let's get our charts set up. So we're going to have Bitcoin right here. We've got the daily time frame. We're going to go on the 1 hour chart, okay? I'm going to bring that bad boy as close as we can. All right, in. So here are our ranges, okay? We're going to have Bitcoin right here, or Powell. He's going to be talking right here. That's currently on play. And going to wait for that bad boy, let that come in, and then we're going to have Bookmap to the right. We're going to zoom out, park these things all the way at the top there for anybody that wants to watch them. These are market pulses on Bookmap. I'm going to zoom in ever so slightly. There we go. All right. So are we good with that? Are you happy with that, ladies and gentlemen? Let's just have a look now at EXO charts. This is where we are with the profile. NASDAQ. Not bad. Okay. Oh, man. This is going to be crazy, man. Here we go. Get yourselves ready, ladies and gentlemen. Get yourself a drink. Do what you need to do. All right. I'm going to increase the tick size on Bitcoin. All right, so what I'm doing now is I'm increasing the tick size, right? So we can see a distinctive move. Now, the point of control, this is Bitcoin, all right? So it's just new tick size. And we're going to keep that like that. Oh, God, bloody hell, Tino. It's going down, it's going down. Don't worry. Don't worry. Okay, then. I'm going to park that right there. That should be it for me, I think. I'd be good with that. Come on, pal, make the bloody conversation. Right. Are we happy with that, ladies and gentlemen? I think that's good. The guy's a nut job. Come on, Tino. Okay, as painful as that was. All right, then. I don't believe this. There we go. I'm cool with that. You can't really see it, but hey. There we go. That is just terrible. We'll put that there. What are you doing? What are you doing, Tino? There we go. All right. Sorry about this, gang. I'm losing my bearings here. Here we go. All right, then. Still not on yet. Okay. Dom is right behind you. Yes, I know. We'll keep an eye on that Dom in a second. We just want to see Powell have his conversation. Are we good? Are our phones off? Yes, they are. No disturbances. Happy days. Okay, then. Cool. What do you think, gang? Do you think it's going to happen? Do you think Bitcoin's going to drop? Do you think it's going to collapse? Here we go. Here we go. Here we go. All right. Let's get with the flavor. Tell me you can hear it. Come on. Come on, pal. I hope. It's too quiet. Come on. You guys ready for this? Come on, pal. Here we go. Here's the boy. Speak. Uh-oh. Uh-oh.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured. and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Again.
Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace.
That's good.
GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings.
He's going to drink something.
We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
I'm not giving a
But
day.
the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
All right, this is where it gets interesting. We want Wall Street, Reuters, and
from the New York Times. Thanks for taking
there
our
she is.
questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6-month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
I hate this
wordplay. I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick.
Go on, Nick. Here we go.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So,
What a question, man. It's rattled him, look.
As you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is, implicitly, is so in theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Howard.
Who's
Hi,
this?
thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Okay.
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above. Core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well, the labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things, would argue for moving later. In the base case, though, where the economy is healthy and we have as you know, we have ongoing growth, solid growth. We have a strong labor market. We have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Didn't even say.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings, and just wondering going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel's next. Here we go.
Hi,
Not
Chair
got
Powell,
those
Rachel
sauce,
Siegel
man.
from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah.
Yeah.
Well, so
Yeah.
we're not, it's not the pandemic, so we can actually rely on more traditional
That's a
forms.
BS
People
question.
are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rents, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation, so the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do
Oh,
you feel
she's
comfortable
back.
at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a
Said we
12-month
haven't
basis.
achieved the
12 months
soft
is
landing.
our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Oh, no. As if you just said that.
Thank you, Mr. Chairman.
Have not achieved soft landing.
You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that, that other set of factors is really different from other cycles and has brought that working with tighter policy, which has enabled the supply side to recover, I think that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate the neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you
Who's
said.
this guy?
Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market, by many measures, is at or nearing normal.
They cut him off.
But not totally back to normal. And you pointed to one or more of them. So I think, job openings are not quite back to where they were. Wage increases, rather, are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens, it's probably will take a couple of years to get all the way back. And that's okay. That's okay. But we do see, you saw today's ECI reading, the evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is, I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to will is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance. And that's what we want to see. And one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall, there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
What's he say?
Chris.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here, and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months.
Okay, ladies and gentlemen.
What's really going to shake out here? Where,
After he just
when
burped,
we look back, what will we
right?
see? Will
Don't get
inflation
twisted.
have
I
dipped
do the
and
same
then
thing
come back up?
sometimes. All right, when
Are
I'm
the
live, I
last
try my
6
hardest to
months
hide it,
flattered
but anyway.
by factors that are one-off factors that won't repeat
Nothing that
themselves?
we don't already
we don't
know.
think so. We don't.
All right?
It's not what we think, but that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the
All right, listen. The way it's going, nothing really seems to have moved at all. Bitcoin's now made that little pump to the upside. I apologize, ladies and gentlemen, for that flavor by Powell, but the guy in the chat that said, my school professor, what's he doing there? Whatever you said. That made me laugh, man. That brightened up my day. All right, then. So going across the whole board, Dixie back down again into support. The bonds. Bonds swipe lower to only return back up. The yields have sharply moved back down again. That's good news. As long as the yields go down, then the stock market in principle should be moving back up again. It's been a treacherous time. Not giving us anything. I think it's once it all finishes, when FOMC is done, we go over to the news anchors over here, and we can see, look at that, there it is. I would not say we have achieved a soft landing yet. We are not declaring victory. May still be a tailwind on disinflation from goods. Okay, so that is a bit of a problem. Now, what would solidify this story of not so much a soft landing? Non-farm employment change, if I'm frank with you. Well, actually, average hourly earnings. If average hourly earnings goes up again, and it goes up to, well, it stays at 0.4 and they're projecting 0.3, so they're expecting a drop, okay? That means companies are trying to retain onto people, okay? Skilled workers. But you're hearing about a lot of companies getting rid of people, but I don't think they're getting rid of the skilled workers, like the proper skilled workers. All right, agencies and what have you, they're just going to be saying to people, get rid, go away. We're not interested now. Wait until the start of, and then we'll get them back in. All right, this is all because of earnings season. Okay, they just want to buff up the books. It's non-farm payrolls that are going to actually put the nail in the coffin with regards to everything. Okay, now moving on from that, let's just go and have a look at Ethereum for a split second. Not really any movement across the board, ladies and gentlemen. Nothing has happened. Euro spiked up, spiked down. Now, I'll be straight with you all. Going into tonight in the Asian session, okay? That's when we're going to see the flavor of tonight, okay? Now, zooming out, let's have a look. No orders on the offers have come in. Nothing's coming on the bid side. We're back to square one. We had that little bit of movement. They hyped us up for this. And this is the crazy thing about FOMC. If the volatility doesn't turn up, you can naturally anticipate it to arrive. But if it doesn't turn up, this is what happens. But it will happen later on. Need to go into smaller time frames. Let me get rid of this stuff here. Going into smaller time frames, we'll understand exactly where we are with regards to Bitcoin. Okay. So we see the sweep lower. bids in principle have been filled in this move. Look at what we've got here, okay? Same story could be unfolding for Bitcoin. He's tried to go down. They've triggered orders in here. 1.81. Okay, so there's 6 million orders on Bitcoin right here. They could go into the recovery of the wick. Go to the 1 minute time frame. Let's have a look. Okay, then. Is that a red vector up there? No vectors. Okay, this is good news. All right, so they've already recovered the green vector candle. We've got the daily open, which they could come and attack. But because we've got the new monthly candle coming into play today, all right, it's going to be good news if Bitcoin can get above 44,500 before the start of a new monthly candle. That would be solid, okay? But the lower it goes, the more inclined we are to believe that the start of the next monthly candle will only look to recover some of the wick, but not all of it, okay? He just said that they have not really achieved a soft landing, okay? That effectively means that everyone's been spun a story about, yeah, the soft landing's been achieved and what have you. But the market, he just practically said that we're effectively going into what would be called a recession if we're not already there. As someone said, the economy's doing great. Go buy yourself a McDonald's for $20. $20. I don't eat McDonald's, right? $20 for McDonald's. The last time I had McDonald's was when a Happy Meal was less than £2. Less than that. Now it's like £7, £8, is it? Whatever it is. But when things that are cheap are not cheap, how's that a good economy? Anyways. What else we got? Yeah, same story, different lorry. This is true. All right, then. Ladies and gentlemen, I hope this will serve you. Okay? Hope we've learned a thing or two about this. Platinum members, I'm going to get an update over to you in a short while regarding what to expect next in the Asian session. Okay? But if you are new to the channel, make sure you like and subscribe, and we'll be tuning in tomorrow for the New York Live, which will be the unemployment claims and the ISM manufacturing PMI. Guys, it has been a pleasure. For more information, go to tradersreality.com. You might learn a thing or two. Mad love and respect, guys. Thank you so much. Peace.